My name is Peter Squire, and I'm the Winnipeg Regional Real Estate Board's Vice President of External Relations and Market Intelligence. Let me begin with a market recap. Lots of headlines to describe 2020, a year like no other, unprecedented in its impact on all aspects of our lives, including real estate. One that fits our regional market is a spectacular end to a spectacular year. It was, and is really quite a compelling storyline I'm about to tell. Let's not forget, given all that happened in such a tumultuous year, that our first quarter before the global pandemic really took hold was on very solid footing and delivered strong numbers. Sales for the first quarter were up 12%, and our active listings likewise sat at 12% above 2019, with more than 4,700 available for sale. In our March market release, we mentioned buyers have been taking advantage of affordable prices with a wide choice and healthy supply of listings to choose from, but we also said we know unprecedented times are upon us, with public health being the highest priority now for Manitobans and Canadians. Did you hear that word, unprecedented? Yes, we were using it too, and little did we know at the time what ride we would be on track for. And not only the second quarter was different, as it is normally our busiest one with our spring market commencing and a large intake of new listings, but the second half of 2020 never let up in its year-over-year monthly record-setting numbers. This trend actually started 1 month earlier in June. We all know now we did not have our normal spring market due to the economic shutdown. Everyone's focus was on flattening the COVID-19 curve, and Manitoba was making headway. April saw a drop in sales of 30%, but more important to what would transpire over the year was the deeper drop-off in new listings, with a 42% decrease from the year before. As our 2020 President Catherine Schellberg said at the time, to be expected, the local real estate market felt the impact of government stay-at-home measures to put the economy on hold to protect Manitobans' health and well-being. These measures have been well heeded by everyone, to the extent that we can now start to reopen the economy. Realtors are adjusting their practices to ensure transactions are safe. May, which is usually our busiest month and was the best month ever on record at 1,705 sales in 2019, was anything but in 2020. Sales were down again, though the last week of May, with the economy opening up and realtors able to hold open houses under new measures, the latter part of that month showed real promise, with similar sales to the year before, to offset the bigger decreases in the first half of the month. June picked up the pace from what started in earnest at the end of May, with sales taking off in a V-shaped recovery that extended upward into what I refer to as a check mark as the year progressed. Not only did June set an all-time MLS monthly high sales record of 1897, it brought year-to-date sales back to even with 2019. If there was any thought June was just catch-up because of the disruption of the normal spring market in April, think again. July now has the distinction of being our best month on record with 1,898 sales, and not to feel left out in this impressive surge of year-over-year monthly increases, August delivered another 1,800 plus month at 1,845. These results clearly set up our year, with still 5 months to go, as one that would truly be remarkable in its ability and workmanlike efficiency to converting fewer listings to sales. Why? Because listings never did fully recover from the deficit created earlier in the year. New listings coming on the market during this incredible 3-month spike in sales starting in June fell far short of duplicating it, as they could not even match the 2019 number of listings. This pattern continued with September, reinforcing a real divergence between sales and new listings. Sales were up 47%, while new listings down 3%. The final quarter, with the exception of a slight increase in December over December 2019, showed new listings falling behind 2019. As a result, we had months like October where our active MLS listing supply at month end was down 35% and 45% for single family home listings. The 5.5 months of inventory going into 2020 had now been cut down to just 2.2 months. There was no hesitation to say we have now moved into a seller's market based on how rapidly depleted our listing supply had become. Let me give you a little bit of an insight into buyers who clearly showed more intention to buy than sellers did to list properties in 2020. In June, the Winnipeg Regional Real Estate Board teamed up with the Manitoba Real Estate Association to conduct a public survey due to the onset of the pandemic. The probe research poll of 1,000 Manitobans confirmed the pandemic was not going to deter buyers from moving ahead to purchasing a home. In fact, it detected that some were now prepared to advance original plans to buy a home. Only 11% said they are now less likely to purchase a home because of COVID-19, with the vast majority, 84%, saying the pandemic has no bearing on their home buying intentions, and a small number, 4%, saying they are more likely to buy a home now. Will Dunning, Chief Economist of Mortgage Professionals Canada, who was our keynote speaker in 2018, had a similar idea in mind. He conducted a series of national surveys in 2020 to ascertain the consumer mindset due to our fast-changing world. He said most of the time, the recent past gives us reasonably reliable clues about what might happen in the near future. But this is not the case in these abnormal times. The COVID-19 emergency has resulted in extremely volatile shifts in the Canadian housing market. At this point, it is impossible to confidently develop any forecasts for the housing market because of uncertainty about the key factors that will drive consumer decisions. I happen to agree with him. How do you plan a forecast for a 100-year event? The consumer reports he has written based on these surveys is entitled Rapidly Evolving Expectations in the Housing Market. He plans to do a follow-up one this year. His surveys reaffirm our own June survey and even dig a little deeper. He essentially confirmed there is a shift in consumer expectations, with a primary one being to find housing that is more suitable in a work-at-home, spend more time at home world. The potent second factor enabling Canadians to make their move were extremely low interest rates. They came about as a result of a decisive Bank of Canada action to inject financial support into backstopping the stalled economy and for much-needed federal relief efforts. Home ownership was a true beneficiary of Bank of Canada measures, as made it more accessible for first-time buyers and incentivized those experienced buyers that may have always longed to move up the housing ladder or consider a second property investment. Dunning's survey data also revealed that people in reasonably stable economic situations who expect that stability to continue showed a heightened interest in home buying. This raised interest in changing places and made it a priority in 2020. Making our own regional market attractive in this circumstance is its relatively affordable housing prices in respect to major housing markets across the country. And I add here, this applies to all price ranges. Now for the numbers. How can I not lead off with the $4.9 billion in dollar volume, getting close to an additional $1 billion in MLS market activity in 1 year, when it took us 99 years to get to our first billion in 2002. 2020 resulted in a 21% increase in dollar volume over 2019 and a 17% rise in sales. We had 16,033 sales compared to our previous best sales total in 2019 of 13,622. The last time we had a climb of the same magnitude was 1992, 28 years ago. On the other hand, active listings of 2,316 at the end of 2020 are down 38%. Listings entered on our MLS system in 2020 decreased 8% to 23,541. Why so many sales? We converted or turned the listings we had available into sales at a much higher rate than previous years. The last 2 years we were at 53%, where 2020 is 50 percentage points higher at 68%. What about our most dominant property type, residential detached or single-family homes, which represented 71% of our total MLS sales in 2020? Their rate of converting listings to sales was 75%. It was 58% in 2019. As a consequence, despite the 10% drop in listings entered in 2020, they were still able to generate a 17% increase in sales, taking them for first time over 10,000 to 11,440. This is where it gets interesting. Where did all this happen? It was largely a rural phenomenon in terms at least in sales percentage increases. Rural sales outside of Winnipeg vaulted 37% compared to 7% in the city over 2019. They recorded nearly another 1,000 sales in 2020. It needs to be stated that there was further expansion of Winnipeg Regional Real Estate Board's market region in 2019 into rural areas such as the South Central Plains MLS area encompassing Winkler, Morden, and Altona. As a result, not all sales in those new areas came on stream at beginning of 2019. To make a more accurate accounting, the rural sales still equated to roughly 29% over 2019. Rural's highest sales total previously was 2019. As for all rural MLS sales, including residential detached in 2020, they grew 6 percentage points in market share from 30% to 36% of total MLS sales. Winnipeg's residential detached sales are 5% above its 5-year average and 2% above its best year in 2016. Winnipeg nevertheless had its best year ever in sales and was clearly more limited than rural in its ability to spur on more sales due to a lack of available listings. It was noted during the year that a number of Winnipeg neighborhoods had more sales at the end of the month than listings remaining. So you know a rapid turnover is happening. Good available listings were hard to find and not able to keep up with demand. On the other hand, rural areas have historically, and even in 2019, not had the same listing shortage issue anywhere near to the same extent. What they did experience overall, like Winnipeg, is a much more pronounced upward trajectory in residential detached listing conversion to sales than I've ever seen before. A number of the rural MLS areas bumped up from 50% or under in terms of listings selling to over 60, 70, and 80%. Steinbach MLS area saw its sales increase 26% to 556 sales because it converted 79% of its listings compared to 55% in 2019. Another good rural example is a major increase in sales activity in the two MLS areas encompassing the west and east side of Lake Winnipeg's southern basin. The west side beach communities experienced a sales increase of 49%, and that was mostly due to listings going from 45% conversion to sales in 2019 to 70% in 2020. The east side saw an even more dramatic change, with the conversion rate nearly doubling from 32% to 63%. In fact, the MLS area that runs further up along Lake Winnipeg on the east side and includes Lac de Bonnie doubled its conversion of listings to sales, as went from 34% to 68%. So how did this much higher churn in listings to sales affect prices? I think you know the answer already. Yes, they went up. The average residential detached price increased 5% from $324,122 in 2019 to $341,175 in 2020. Looking at the 5 MLS zones of Winnipeg and the extensive rural regions surrounding Winnipeg, the highest one at $460,301 is Southwest Winnipeg, with the lowest being West Winnipeg at $266,074. The biggest average price percentage increase was the Southwest MLS zone, with just under 8% rise in prices. Helping push the average price higher in 2020 in this zone were far more higher priced home sales, with the 500,000 to under 750,000 most active price range, with nearly 1 out of 4 sales. There were also many more $1 million plus sales in MLS areas such as Tuxedo. One sold for $3,750,000. For the first time, Tuxedo finished the year with an average sales price over $1 million, though its median price was $833,000. While it appears the rural region with an average sale price of $321,000 is not home to some of the more expensive sales in our market region, this is not true. There are 6 MLS areas with average sale prices well over $400,000, another 2 in the high $500,000 range, and headingly south, nearing close to $1 million with its 20 sales. Speaking of where sales are happening, the price range breakdown in 2020 shows an upward tilt to higher price ranges compared to 2019. It appears certain due to many more multiple offer situations where the second half of 2020 saw almost 1 in 3 homes selling for above list price every month. A number of first-time buyers in particular were buying homes in the $300,000 to under $350,000 price range rather than the lower $250,000 to under $300,000 one. In the end, the historically dominant $250,000 to under $300,000 range edged out its next higher one, but barely, as they both represent 17% of total sales for the year. More space was clearly a motivating factor in house purchases in 2020, as besides the $300,000 to under $350,000 range, climbing up from nearly 1,500 sales to over 1,900, a 30% increase, the $500,000 to under $750,000 range rose 49% to over 1,000 sales. Sales under $300,000 in 2020 only inched up 2% compared to 2019. Condominiums are the comeback story of 2020. Sales fell well behind last year, but slowly but surely they started catching up, and by October pulled ahead to stay, soaring 62% to 149 sales. December sales raised the year-end total to 1,847 sales, an over 5% increase compared to 2019. Conversions of listings to sales went from 45% to 51% in 2020. The Osborne Village MLS area led the charge with 139 sales, while West Winnipeg's Crestview MLS area was well back with the second most sales at 86. The most active condo price range remains from $150,000 to under $200,000 at 25%, with the $200,000 to under $250,000 range next at 20%. 77% of condos sold in 2020 were under $300,000. Only 43% of residential detached sold under this $300,000 threshold. The average condo sales price in 2020 finished up less than 1% higher at $240,060. In a final wrap-up of 2020, other property types besides the ones featured above took center stage last year. Vacant land had a rocket-fueled trajectory, with sales rising 72% from 502 to 861. The Steinbach MLS area alone had 111 of these sales, with the majority of them taking place outside Winnipeg. Townhouses were up 42%, mobile homes 27%, and resort properties 25%. There is an important point to make in this regard. Total MLS sales for an MLS area, which include all property types, can go well beyond the 2 main ones of residential detached and condominiums. Steinbach finished the year with close to 900 sales, yet the 2 main property types total combined that we tend to focus on was 615, leaving 30% of sales being made up of other property types. Similarly, The second and third most active areas for MLS sales in the Winnipeg Regional Real Estate Board market region, namely Winkler Morden and Waverly West, had similar combined residential detached and condo sales over 500, but had total MLS sales of 697 and 607 respectively. This showed an additional dollar volume as these other property type sales in these three leading MLS areas in 2020 generated well in excess of $160 million, with each exceeding $50 million. Here is likely what we can anticipate for 2021. And before I do that, let me remind everyone to stay for a prize draw from OneLink at the end of the presentations. For starters, I, like many others in the housing market, did not see the extent of what would unfold based on the pandemic and its impact. While I may have predicted the average condo sales price correctly at even, I obviously did not anticipate huge dollar volume expansion and the residential detached price increases we experienced due to the rapid residential detached sales gains, depleting our initial healthy and balanced supply at outset of 2020. As a result, many more bidding wars occurred and drove housing listing prices up from our most popular range of $250,000 to under $300,000 to the next higher price range. Listings started lagging behind right at the beginning of the pandemic because of seller reluctance to put their homes on the market. This pattern continued, so they were unable to go anywhere near matching the increases in sales every month. The pandemic was and still is a whole new ball game, and one changing the goalposts and reshaping our regional market. One thing I did grasp earlier on is how our local market, with it being one of the most affordably priced housing markets in the country, had the potential to capitalize on rock bottom interest rates due to Bank of Canada lowering the overnight lending rate to 0.25%. Let's be honest, low interest rates are such an incredible driver of demand. And at the beginning of the pandemic, we actually had a decent supply to choose from, especially in our rural MLS areas. This was much less so in Winnipeg as MLS sales caught up to 2019 in June and never looked back afterwards. I also got a sense before economist Will Dunning proved this in his consumer intention surveys, how motivated Manitobans were becoming to move to find a more functional and suitable place to live. To have back-to-back months of 1,900 in June and July was more than a recovery and begged the question, what is going on? We now know there's clearly a shift in housing preferences and how people wish and need to use their homes. They need to be more versatile and adaptable. The pandemic attached urgency to people wanting a place with a space to satisfy their new unmet needs. When you have the above two demand drivers working together, housing supply is hard-pressed to be responsive to them. You cannot wave a magic wand and voila, here are more properties, and I should add the right one for you to buy. Choices become limited. While not entirely throwing caution to the wind, I am feeling optimistic that this trend will continue this year. An encore performance at least is possible in my view. Why? In July 2020, the new Bank of Canada Governor, Tiff Macklem, declared interest rates will remain low for a long time, and that certainly extends out the next few years from his announcement. And while on mortgages and financing a home, Canadian mortgage trends in January stated all the 6 big banks, including our sponsor CIBC, are reporting the vast majority of their mortgage deferral clients are back to resuming monthly payments. National Bank said 98% of their expired residential mortgage deferrals have restarted regular payments. I know you want to have it sooner than later, but the vaccine will get into our arms in 2021 and lead us back to economic recovery and a return to activities we so cherish and long to get back to. It gives me hope employment growth will show marked improvement and more potential first-time buyers and others that remained on the sidelines in 2020 will take advantage of our affordable housing market. Immigration is a major contributor and key component of Manitoba's economy and our housing market. The federal government is ratcheting up our immigration numbers starting this year with welcoming over 1.2 million newcomers the next 3 years. When they are able to arrive is still yet to be determined. Speaking of adding to our population, Manitoba still had a 1.1% increase in its population up to April 2020, bringing it closer to 1.4 million people. And we have one of the youngest median ages in the country at 37. On a real positive note, and credit to our industry and our realtors, we have a great product to sell and are applying technology in new interactive ways to showcase it and successfully conclude transactions. Home ownership is as desirable and coveted as it has ever been. The record number of house sales is proof of that here and across the country. In a January RBC home buying sentiment poll, 80% of Canadians said home ownership is a good investment. It also brought out how much Canadians value their homes in ways they never realized before. Bloomberg Nano's Canadian Confidence Index, released in January, shows Canadians are the most optimistic about the housing market than they have been in years. Desire coupled with optimism is a powerful combination, and it will help drive the resale market in 2021. As we discovered more than ever before in 2020, residential detached and condominiums have a great supporting cast on their MLS team as other property types came to the fore and showed how Manitobans are looking at different housing and recreation options to satisfy their real estate needs. This year, we no longer have the balanced market that we had at the beginning of 2020. As a result, our residential detached listings at year end are at 925, fewer than half as many as we had going into 2020. Similarly, residential attached only have slightly more listings than were sold in all of December. Even condominiums that have been singled out for their oversupply in the past few years are down 17% from the last 5-year average, with 429 listings. Our sellers' market conditions still prevail and means with continued strong demand, supply will be challenged again to keep up and restore more balance that existed pre-pandemic. Hopefully, a successful vaccine program can make a difference to seeing listings pick up this spring and well into the second half of 2021. I think you've heard enough percentages, so I will just mention ranges of where I think we may end up in 2021. A caution and a reminder that we are in a pandemic and uncertainty is very much a part of it. Home sales should retain momentum started back in June 2020 and could end up reaching over 11,000 again and even threaten the next threshold of 12,000. I see our average residential detached sales price heading up in the 350,000 to 360,000 range. Condominium average sale prices have a chance to firm up more this year and not only stay above 240,000, but head up higher to 245,000. An MLS dollar volume that I seem to always underestimate should eclipse $5 billion this year, but come back to earth with a single-digit percentage increase.